So in the last two videos, we discussed that how important it is to extract some minor informations that are hidden in the previous year question papers. And in this video as well, we are going to continue the same exercise. Hello everyone, welcome to Score Settled. Now, continuing the same exercise that we followed in the last two videos, let's proceed with some more questions. Now, choose the correct chronological sequence in ascending order from the earliest to the latest. Now, FRBM Act, it was introduced in 2003. Now, please note that we have discussed two papers as of now. And till now, we've got multiple questions on FRBM. So please remember that this is a very important topic and do not miss this out in your exam. Okay. Second is the nationalization of banks in India. So first phase was conducted in 1969 and second phase was conducted in 1980. Then we have second 5-year plan, which was between 1956 to 61. Then Small Industries Development Bank of India, SIDBI, that is in 1990, and Exim Bank in 1982. So from earliest to latest, we can say that it is C, B, E, D and A. Okay, so that is the chronological order. Now the examiners are very careful in formulating their questions, because we know that nationalization of banks of India was conducted in two phases, that was in 1969 and in 1980. So to avoid any sort of confusion, they have avoided giving any other event or establishment years between these two years. Okay, let's move on to the next question. Arrange the following norms of tax revenue devolution formula for the 15th Finance Commission in order of their weightages starting from the highest. Right now, this is also very important question from UGC point of view, from CUET PG as well, because this has been repeated multiple times. Okay, so the suggestions given by the 15th Finance Commissions and so on, they're very, very important. Okay, so income distance, the weight is 45%, area is 15% weight, demographic performance is 12.5%, forest and ecology is 10%, and tax effort is 2.5%. So from the highest, we can say that it is A, B, C, D and E. Okay. Moving on to the next question. Now this question can be formulated in terms of match the following, find the correct pair, and even like in this one, the year, right, when the theory was given. So please keep in mind or keep a note of the years of the who propounded the theory, what was the theory, and if possible, you can also write one statement regarding this theory just for revision purposes. Okay. Now, arrange the following in chronological order starting from the earliest to the latest. Phillips, the Phillips curve was given in 1958. Keynes gave general theory of employment, interest and money in 1936. Adam Smith gave the theory of growth in 1776. Muth gave rational expectations approach in 1961. And Solow gave the growth model in 1956. So from earliest to latest, we have Adam Smith, then we have Keynes, then we have Solow, then we have Phillips, and last we have rational expectations approach. So this is the order. Okay. Next question, and a very, very important one. Identify the correct statements from below. Now, according to environmental valuation, option value is equal to future use value plus bequest value plus vicarious value. That is a correct statement. Okay, just for additional information, what is bequest value? Bequest value is that when the natural resource is preserved, it for the future generations to enjoy it. And the vicarious value is that the satisfaction a person gets that others are also enjoying the resource. For example, you maintain a good park in front of your house or keep the roads clean and so on, right? So this statement is right. Then adverse selection leads to market failure. Yes, definitely. One of the reasons of market failure is adverse selection. Other is asymmetric information. Then also, contingent valuation method is a type of cost benefit analysis. Absolutely not. So this statement is actually given to confuse you, right? So contingent valuation method is basically a survey based method, okay, and it is a survey based valuation tools which is actually used in accordance with the cost benefit analysis. It comes within the cost benefit analysis. It is not actually a type of it, right? It is a separate survey based tool. So C is incorrect. Public goods and common goods have same characteristics. Again, this is not correct. How? These public goods are non-rival in nature, right? And common goods, they have the feature of rivalry. Okay, so this is the thing. For example, a fish in a sea, right? That is a common good. So consumption by one reduces the amount available for consumption for the others, right? That is the case of common goods. Whereas public goods, so consumption one by one does not reduce the amount available for others to consume. That is the public goods. So the one difference between public goods and common goods is that public goods are non-rivalrous, whereas common goods have some degree of rivalry in its characteristics. Last is that internal rate of return is a criteria in your cost benefit analysis. Yes, this statement is true. So basically it analyzes the internal rate of return, basically analyzes or evaluates the profitability that is achieved by certain investments. Okay, so that is what internal rate of return is. So A, B and E are correct. Okay. Now moving on to the next question. Inflation confers no benefits on society, but it imposes several real costs. What among the following are the costs of inflation? First is the shoe leather cost associated with reduced money holdings. So shoe leather cost is not the cost of the raw material as such, but it basically reflects the wear and tear. Okay, wear and tear and the opportunity costs that arise because of inflation, right? So if a person is keeping some cash in hand for consumption, right, and if there is an inflation, right, so the real value of that cash is falling and he will have to go to the bank time and again. Okay, so for example, if a person is withdrawing rupees 10,000 and he was able to survive throughout the month in this 10,000, right? Now when the inflation has increased, so now he cannot survive in this 10,000, but to withdraw this money, he has to go to the bank, say twice, right? So that is what your shoe leather cost actually means. Okay, so shoe leather costs associated with reduced money holdings. Yes, this is true. Menu costs associated with more frequent adjustmental prices. That's true. So if the prices of gas, vegetables and so on, raw materials basically, if they increase, the restaurants keep a margin of it. Okay, so they have to print the menus and so on. So they will accommodate such inflation tax as well in their prices, so that any unforeseen increase in prices will not lead them to again spend unnecessarily on printing new menus. Okay, so this is true. Next, increased variability of relative prices. Yes, this is also true, because basically the price signals that are received by the consumers and the businesses, if there is a frequent fluctuation in inflation, these price signals are affected. People are not correctly able to anticipate the inflation on in the future. Okay, so this is also true. Then unintended changes in tax liabilities due to non-indexations of the tax code. Yes. So what happens is that if there is an inflation, if inflation basically increases, okay, this will lead to workers demanding more wages. So the nominal income increases. Whereas because of this inflation, the real income has actually fallen. But because of this nominal increase in income, people are moving to higher tax bracket, right? And as a result, they are paying more taxes now. So this basically, the rise in nominal income is not accounting for inflationary pressures. It is actually creating a burden on the taxpayer, okay, because the real income is not accounted for. So even if today, if those who are falling in the 30% bracket, that is why they are facing that inflation burden, okay. So this is also true. Then arbitrary redistribution of wealth associated with debts, yes, that is also true, right? Because now when the inflation is there, the purchasing power basically shifts from the creditors to the debtors, okay. Now if, for example, if someone has taken a loan of say 1 lakh rupees, right, now that 1 lakh rupees which has to be paid say after 5 years, okay, so that value will be now say 75,000 if we consider the present value, okay, taking into account the inflation, okay. So 1 lakh does not have the same value which it had 5 years back, right, but the debtor is paying in absolute terms, okay. So who is benefiting? The debtor is benefiting. Who is losing? The creditor is losing, because he is getting the same 1 lakh which he gave to the debtor, okay, he is getting it back with the reduced value of money. So that is why we say that inflation is actually beneficial for the debtor and not the creditor, okay. So all these statements are true. So now you see that how important it is to solve the previous year papers and how much of a crucial information you can get out of it. It is not always necessary that the pattern of asking the question remains the same. The knowledge is the same, but the way of asking questions changes with every examiner and the person who is setting the exam. So you should be prepared with every minor information that you can get, okay. And that's why we always recommend you to solve at least past 10 papers that have been conducted, okay, and also prepare notes from it, because in the end, in the last 2-3 days before the exam, you are not going to shift back to books, you're not going to read text, but you're going to revise from these notes only, okay. So I hope this video was useful, and we'll come up with some more interesting questions in the next one. Till then, take care. Bye bye. Thank you so much for watching.